Hello, world. Welcome into another episode of Wine Wednesday with two of your three hosts. The third, he is on his way. His computer just decided to restart him on himself, but obviously we're a few minutes late, so we thought we'd just get started. He'll join us when he joins us in a couple minutes. But anyways, welcome in to another episode of Wine Wednesday. I'm going to start us off real hot and quick. What are we drinking? Because I'm going to guess Dom is going to drink either tea, water, or some kind of healthy drink. Huddie has forgotten his drink, so I will share. I have last week's wine, still good because we had a top in it. Actually, when I opened it, because I know Dom's skeptical, when I opened it, you could hear, it was almost like I was opening a can of soda. All of the pressure was just, so it's still nice and fresh, or as fresh as it could be for a week old. So we're probably going to finish this today and do a new bottle next week, but just as good. And then Kelly is obviously not in the stream, but she was joining me with a Aperol Spritz. She loves that. So she's having that with me tonight. We're also having pizza night later, so we're going to make some pizzas, enjoy our drinks. So it'll be a fun little night for us. But anyways, did you grab a drink there, Huddie?
Nice. Yeah, I'm going with a sparkling water tonight. I got a Topo Chico raspberry with lemon flavor. Kyle, you would like it.
Nice.
It's your favorite color.
Lemon?
It's pink.
Oh, nah, pink's not my favorite color, but it looks good on drinks. That looks tasty. That looks sugary.
Reminds me of your like Trulies.
That is true. The more fruity looking the reds, the yellows, the pinks, the oranges, makes me think of juice, which makes me think of Trulies, which makes me think of drinking and enjoying it. So I would agree there. But anyways, checking out the chat here. Welcome in, everyone. We have Kellogg in the house. He said, fart on a dog tree leaf. That's something Dom would say. I think he's referring to the fact that Dom's late. Very nice. Kellogg, let us know if you'd like to join. If not, no worries. You could be, I don't know, farting on a leaf in the woods for all I know. But anyways, while we wait for Jim Bob to join us, the market's still going. We're still in the, what's it called? The volatile times of the overall markets. I forget. Oh, yeah, that's the Powell went on today, and I didn't listen to his speech, but I got the gist of that he is not steering course at all. Despite the recent events, he is not looking to raise or Clover rates at all, and so the markets did not like that. We closed down about 2% in the SPY, 3% in the Nasdaq.
Wait, what did he say?
He said, I didn't watch it, so don't take me verbatim, but the gist that I got from the highlights was him pretty much saying, like, yeah, we're not lowering rates any faster than we already intended to, right? And I think a lot of people were getting optimistic that given the foreign, or given the tariffs, given the most recent inflation print being much lower than expectations. I think the expectation was like 2.9. It came in at like 2.6, which is like the lowest it's been in quite some time, and very close to his 2%, level that he was going to be like, okay, like let's start slowly lowering rates back to, I don't know, wherever, but more so than people expected this year. But he's come out saying that the fact that the tariffs are not completely out of the way, he thinks those will be inflationary, and so he is just staying the course and not budging. And I don't think the market's like that one bit, because if I had to guess, if I'm a participant in markets, I would guess that because the warrants are the tariffs are 90 days delayed, I would imagine over those 3 months, a lot of them will get resolved with countries that are willing to make a deal with the administration. And so I think by the time, if I had to guess with my crystal ball, after 90 days, the tariffs will not be as ugly or as frightening as they once were, or even existent. There could be a world where there's less, significantly less, to the point where it's not a big deal. But again, I'm just throwing all scenarios out there. But Mr. Powell doesn't seem to think so. So he's holding steady.
I don't like him.
That. Yeah, I'm. My only worry is relevant of tariffs is that he just will hold them high for too long, and then something breaks, then he has no choice to lower them to zero. If you've studied any of the previous recessions,
what if he's wrong?
What's up?
What if he's wrong about his assumptions?
Yeah, no, I that's my worry, because I've looked at I forget it was a documentary. It was a documentary or a series.
Oh wow!
Hey Bob, welcome. What's all wow for? We're live, right?
Listen to your story.
Yeah,
we're having smart people conversation.
We were talking about overall markets. Yeah. Anyways, whatever
I
watched.
should get out of here then.
We're talking about the Magnetic 7 and how they do over time.
Oh no.
No, but whatever I saw, it talked about how all previous recessions have been somewhat triggered by the Fed's actions. Like the Fed has prevented, or the Fed tries to mitigate and protect from the previous recession, and in doing so creates the storm for the next one. And it's such a long process that they're never really to blame. You can never really point fingers and be like, it's your fault, and the Fed just keeps doing what they're doing because you kind of need them, I guess, in the way that our system works currently. But like they are their own problem. They just keep rotating from one problem to the next, and one solution becomes the next one's problem. And so my fear is that like he's so gung ho about 2022 and inflation not going back up, but in the process he's going to then create the next issue that we obviously don't see coming because I don't have a crystal ball and can't tell what that is. But it just wouldn't shock me that plays out like that. So that's my only worry, just from a history perspective. But anyways, Dom, before you say anything, I guessed you were drinking water or tea. What are we drinking?
You're wrong.
Oh, no. What are we drinking?
We're drinking a Zevia.
What is that? Oh, from yesterday or from last week.
Like the fake pop.
Yeah, the fake pop. There you go. I was wrong.
With a little ice, in a glass. It tastes delicious.
Yep. I hear you.
How we doing?
We're doing good. We were talking about.
I was just sitting here watching my computer restart, but nothing happened, so I just held down the button on it. And it just got me thinking, how much I hate technology. Everyone says we're so far ahead, we're so smart, AI this and that, magnetic 7. And I'm like, why do computers need to restart? They should just know everything they need to know, do everything they need to do. Like, what do you restart? What are you really doing when you're restarting? Like,
it's like until I have to stop turning it on and off back on again to reset to make sure the thing works.
Yeah.
We're not that advanced.
Like, what am I really doing if I shut off and turn back on? Like, shouldn't you be able to restart with it on? Like, where have no one answered these tough questions?
It's like that's what we do when we sleep, right? We're sleeping, but we're still on. We're just resetting.
Like, why does it has to go black to come back? Like,
oh god,
I don't get it. But welcome. Good morning. How's everyone doing?
We're doing great. Feel free to.
What a boring week.
Yeah, this week I will agree. I've taken trades, but not a whole lot is happening P&L wise just yet. I feel optimistic on the horizon. I think things are brewing, but I would agree not a whole lot this week. Also shorter week, only 4 days instead of 5. So unless something magical happens tomorrow, not expecting a whole lot.
Do you ever get depressed when it's like, we just wrapped up the third day in the week, but there's no Friday. So you're like, tomorrow's the last day. And it's like, if you haven't done anything P&L wise, you're kind of like, if I'm going to have a decent green number next to this week, I'm going to have to do something tomorrow. And there's like, you're running out of time, but it's like, again, does not feel like the week even started because like nothing's moving.
Yeah. Well, that's the easy go-to pressure that I think a lot of people put themselves on. That like they have that exact conversation that you just had with yourself. And then they come in tomorrow morning, like having this urge to make something happen when the reality is they might not have anything to make happen. And then it leads to them having the opposite effect, which is being red instead of green. And then they think to themselves, why did I just not trade and close the week? Maybe small red or green, break even-ish, then big red. That's kind of how I feel. So if nothing shows up tomorrow, I'd rather have nothing at all than lose big. So even though I do agree with you, I would like to get the ball rolling to some degree, but it just doesn't happen all the time, unfortunately. So
it's a sad reality.
But anyways, chat, feel free to put in your questions, your comments. And yeah, we'll get to them. We'll start riffing them off. It's like kind of like webinar style, but no charts, no trading. And if you're on 4-leaf,
that's what I was going to do. I was going to pull up charts.
There we go. But if you are on 4-leaf, webinar tomorrow with me at 11 Eastern. So let's stay tuned.
Huddie, just side note, did you upload the webinar from yesterday?
No.
Okay.
Right.
Someone asked about it in the room today.
Huddie's going to upload the webinar for yesterday. Into the archive it goes.
Did you swing bull, Stephen Wonder?
Yes, I am still currently in that. I don't love after hours action because it is kind of floating up, but it's very illiquid, so I'm not too worried about it. And I
cannot believe you shorted that at 39 today.
It's and I don't love it either, but I just trusted that little support level, and I think it supported me. It trusted me because it worked, and so given that it worked, it's given me the confidence to try to keep it letting it work. Had it just like came right back and then bounced around and went back green, I definitely would not be in any longer. But we'll see. This is one area where if it does choose to go to 30 tomorrow or just lower than it did today, that could be a week saver for me, and I would turn out a decent green week. But we'll see.
How could that save the week? Where were you risking?
Risking like 41s ish, 42 worst
That
case.
tight.
Yeah, pretty tight. I was my brain. I was like, this is going to work right away, or it's going to be a pain in the butt. And so it did work right away. And so we're going to try to keep that vibe flowing into tomorrow. We'll see. It could backfire, but I'm going to trust it.
You crazy man.
Yeah. But yeah, I agree. I mean, it could have if the CEO wasn't going to go on CNBC sooner in the day, I probably would have considered it sooner. But because I didn't want to deal with nothing really happened volatile-wise, so maybe I should have ignored that. But getting short into that or without that would have been maybe a entry certainly in the low to mid 40s would have been better. I do agree, but it is what it is. Also, did you see Dom? Sorry, riffing off questions. Did you see HTZ in after hours?
No, is that Hertz?
Yep.
Wait, they're not HTZ anymore?
They're just HTZ. Yep.
Are they OTC or regular?
They are NASDAQ.
Wow.
Or New York Stock Exchange. I forget which one, but they're backlisted as normal.
That's all after hours.
Yeah.
So it'll be a gapper tomorrow.
Mr. Ackman took a stake in the company. Why, I don't know, because I mean they were at a sub $1 in bankruptcy. Redid their whole shebang, wiped out shareholders, came back. Not wiped out. I think they actually came back just fine. Came back, started trading at $25, between $20 for $15 and $20 for almost like 2 full years, and then their failing business model, like it was before, began, and then it would drop from 15 down to 3-ish. And now we're back at 8 because Ackman took a stake. And so I'm very curious what Ackman feels or thinks about the company.
It's probably because he saw Tom Brady in a commercial and he's like, well, they got the money to pay the GOAT. They're probably sitting on some large reservoirs.
I didn't put that 2 and 2 together, but I have seen that commercial. Isn't it like 5 seconds too? He's like, they'll pick you up.
It's lit. Yeah,
and that's it.
I saw it today. I remember thinking, wow, he really gave it his all for those 5 words.
Yeah, he got $1 million per word or something nuts. And this is like, that was it.
That's a pretty decent little breakout over last year's highs.
Yeah, it's a pretty big move.
Actually, not all the way, but
we'll
be talking about it on Good Morning Nasdaq probably.
Yeah, I don't think it's something.
No, maybe not.
I don't think I'd short a billionaire play or a $1 billion stock in general as a gapper. But I'm curious, what's the market cap? It's probably like a few billion. Hertz market cap. Yeah, just under 2 billion, and that's Google. So I'm assuming that would be at today's prices, not including after hours. So maybe it's
2.4 billion.
Yeah, maybe it's now reaching the 4 billion mark after being 100% after hours. Pretty cool. But anyways, for Ranny, anyone take AREC in the afternoon? Let me take a look. I have not looked until now, so I guess the answer for me would be no. Also,
is that the one that was actually a breakout? I think
it was actually.
Yeah, this is the kind of stuff I'm trying not to miss anymore, but still doing it when there's nothing to watch.
91 cents breakout, pretty solid.
This is what I'm talking about. They're far from the breakout level, but they do massive volume early in the morning and 60 to 125. What happened in the afternoon?
I think it just held super well and then uptrended in after hours a bit.
80 cents, 86 cents. Yeah, I don't know. Where's the breakout? They turn after hours off.
Breakout was 91.6.
Oh, so the afternoon was the actual breakout. Yeah, well, you had all day. I don't know what I was doing, but
something. Maybe,
that's frustrating.
Maybe it continues tomorrow. That'd be cool. Get another
86. You had to risk about 10 cents a share. That's annoying, but
you're right. Yeah, 80s was low 80s or 80 was like on the wider end, but it kind of had to some degree. Or if you're ballsy, you could risk VWAP, but you're taking a gamble that it was going to hold.
You just knew it was going to go up. You didn't really have to risk anywhere down there.
Yeah, in hindsight, it's like you were up right away, pretty much. I love when that works for breakouts, but you never know. Otherwise, if you did, I'd be a billionaire.
I hope it goes higher. I hope all these stocks that we're talking about today go higher.
Yeah. Sly asks, can you explain your entry and exit thought process on TGL today, whoever decided to trade it? So Sly, I'm going to give you a very short answer only because we have probably answered this question probably a dozen times across Good Morning Nasdaq. So I'm guessing, I think I even said, it was either you or someone else in Good Morning Nasdaq. We could tell by when people ask questions who's new and who's not, because just it's a repeated question, which is fine. I am looking for a lower low. And by lower low, I mean a low that it's set for at least 5 to 10, 15, 20 minutes, something longer the better, right? But a lower low that's
25, 30,
yeah,
35.
26 and a half, right? Just somewhere that's longer than 2 or 3 minutes, right? And once that lower low is made, I like to get short. I risk super wide, usually 40%, if not high a day, depending on which is wider. And then I just let it fade most of the day, and I don't cover really based on price. I cover by, close. Close is the late. Actually, I should say, sometimes in after hours I'll cover, but usually close is the cutoff, if not somewhere in the last hour to 30 minutes, right? Somewhere in that range is typically when I like to cover. And that's really how most, there's a couple variations, but I think that's how Dom trades it if he does trade it, and that's how Huddie trades it if he does trade it. So there you have it.
Yeah.
Hello Joseph says 50% short interest for HTZ. I don't know.
Not reliable.
Yeah, I was about to say that doesn't really mean much, because you could say it's 50. It's definitely not 50% of the float short. I don't think that's the case. I guess it could be possible, but I don't think it's possible. But even if it is 50% short interest, I don't know the equation to what gets a stock to 50% short interest. Like for example, Bull is like 350% overnight. Does that mean half the float is short? Does that mean 10% of the float is short? Like, I don't know the equation from a broker's perspective on how many shares of the float are short, of how in demand those shares are short are, ergo what rate gets popped out of like, hey, this is the rate you pay. I don't know that equation. So 50% is actually relatively low compared to some of these squeezers, right? Like, again, BULL is 350%. I think Mullen is 300%. I think NMAX was at the highs was 800%. Like, it's gotten insanely high over the years, and I am a bit upset because the fees do stack up. It used to be like something 100 plus 4 years ago was like crazy, but now like that's like good. Like if I short something that's 100%, like great, it's cheap versus hundreds of percent. So it's changed, unfortunately. Jake says, how do you manage trades in after hours pre-market?
You watch them.
You watch them? I would agree.
You can set stops these days. I learned how to do it. I got stopped out of TGL or whatever it was. Whatever Huddie's little secret code on DOS, which is really nice.
It's not a secret.
His little secret code. But yeah, I mean, what do you mean? You got to pay attention when you're in stuff. However, that if you mean like, and actually, or how do we manage them in terms of like plans? We're really not in a lot of stuff in after hours and pre-market unless we're usually in a better market where we're swinging stuff long because it's big breakouts, or short because we have massive runners that are super overextended and we think there's more downside. Usually we have cushion, so there's less managing, I feel like.
Last time I swung something in the after hours, I got hosed.
Which one?
RSLS.
That was our LSLS?
Yeah, I was up like $6,000 and then I was down 4 within minutes.
Ouch. That was like 2 weeks ago, right?
Feels more recent than that.
Or a week, 5 days, 5 trading days.
No, it was definitely 2 weeks ago. It was April 1st.
Oh, okay. Yeah. But yeah, this month, so recent. Yeah, I would agree with Dom. I mean, if I'm swinging something, it's because I'm up enough to feel good about it, or I'm just comfortable in the idea that the trade's not going to go massively against me. But there go, I am still watching it. Like even when I leave, perfect example today, I have positions that I'm planning to swing overnight, so technically I have to watch after hours, but I have my phone with me and I just check every 10 to 15 minutes, just pull up the quotes, make sure we're not doing anything crazy, and that's pretty much it for me most of the time. So Wally asks, are the win rate on your patterns lower this year as compared to last year? Question mark. Are you, or are, what? I'm doing it again, Dom.
I'm not gonna say anything.
or are your patterns steady in a bear and bull markets? I'll let you guys answer that one first because I'm all over the place.
I don't
Go, Huddie.
I don't know if bull or bear market really affects my patterns, although I will say that the gap in crap, like let's just talk about that one specifically. Like right now, it's losing more often than it tended to lose last year. But also like last year was an outlier year. Like you would almost expect less profits this year than last year to begin with, because there was like just a like if you run like the actual cadence of how many stocks gapped up 100% last year, there was way more last year than most years. So relative to last year, the pattern's not performing as well. I don't know if that's necessarily attributed to a downtrending market. So I wouldn't like conflate those two ideas. Um, for the most part, like penny stock run, it doesn't matter if the market's on. Bull goes to 400%. It gets overextended. It's overvalued, and it has a nice first red day, and that's going to happen in a bull or bear market. So I don't really think the win rate changes that much. I just think the frequency of opportunity changes.
Yeah, as it pertains to myself, like I agree with Huddy overall. Myself, though, for some reason, my stats are like way better this year than they were like last year. But I think that has a lot to do with the trader at hand and what they're focusing on and how particular they're being. And I think I'm being quite particular in terms of the patterns that Huddy's talking about, waiting for actual plays that should work in any market. Um, I've taken a lot less, I feel like, of like most reversals, breakouts, first red days. But when they're really good and the opportunity is good and the volume's there, they're still working. So, um, yeah. And are we in a bear market? Is that technical?
It's lower than it was last week.
Yeah, I mean we're not in a recession technically,
I
but
don't
we
know.
are in a
I feel like I
fearful
judge it based on like how our small caps right now, and I feel like they're just pretty ho hum. So, but overall, this data is pretty good so far for me this year. But again, I don't think it's too much about market up, everyone make money, market down, everyone lose money. I think has a lot to do with the trader.
Yeah, I would agree with everything you guys said. And just to add a little bit to it, it's like I do agree in bear markets, like how do you mentioned, the frequency of what I trade would go down, but it would still occur. I did make money in 2022. It wasn't as much as previous years, but there were patterns that played out just fine. They just happened maybe less. And then I do agree. It's like, yeah, it depends on the trader, right? If you get into more of a veteran level of trading where you start entering the 10, 15, 20 years of experience, I would imagine you get pretty damn good at like maneuvering and avoiding the pitfalls that a beginner trader wouldn't. So like to Dom's point, like, the market could be crap for all we know, but he has been able to maneuver very well and avoid maybe some of the plays that Dom 5 years ago would have taken and would have regretted it. Just as a very broad example. The only thing more I would add though is that while in your question you're like comparing this year to last year, I almost want to play devil's advocate that like in any one year it's too broad, right? Like market environments you can get 3 different market environments in 1 or 2 months, right? Like they can change in a matter of weeks, if days. And the only reason why I say that is because January, I started off with arguably the hottest win rate month for me ever. I won 83% of the time. I think I took like 7 losses all month long, which is like insane. I just had a very good month. And then you compare it to this month, I'm only at a 42% win rate, but I'm still having a 6-figure month due to just a couple of really good trades that boosted the overall bottom line. So, there's no really perfect answer I can give to you, but it really comes down to, like we said, frequency, and then how good of a or adaptive of a trader can you be with that frequency. So hopefully that makes sense. Joshua asks, when you guys were trading very small in the beginning, how did you make your very first big leap in account growth? where you were taking huge risks. Wait,
Were you?
oh, were you taking where?
Oh my gosh.
Were
dude.
you taking huge risks looking back at it? Question mark. How do I want you to answer? Because I think I know your answer, at least on the second question.
Answer for me.
I'm gonna
I didn't
guess
even understand the question.
Huddie was taking huge risk.
Yeah,
back
Huddie
then.
was taking bigger risks relative to where he stood in his journey when he looks back at it.
I'm Frodo. You can't go back to the Shire once you've seen what you've seen. I don't think you guys have to understand the analogy. When I first started, I was willing to go all in. I mean, I wasn't like risking 100% of my account, but like my account was all in a number of different OTC plays. Because I just trusted the pattern so much, and I hadn't really been scarred. I mean, every time I got scarred, like I was able to stop out and protect myself, and the damage was never more than like, especially in the beginning, like 7K was probably like the biggest loss I ever faced. And I was like up like 70, 80, 90,000 at that point. So, yeah, I don't know. I didn't hear the question.
It was.
How did you when you were trading in the beginning, how did you make your first big leaps in the account growth?
Oh yeah,
Were
I
you
went
just
all
were
in.
you like risking a lot to do it?
I went all in. But I learned that that wasn't sustainable at some point. And it did have its like backlash. And so, the moment where I like made the most account growth was like with very controlled risk reward parameters during 2020 and 2021. Like I was not necessarily I was all in that time too, but that's because like proper sizing and proper risk management, not because I was like gunslinging and just like, oh, this is such a good play that it deserves my whole account. Like I just want to be the biggest I've ever been because I've never seen something like this good out of the pattern that I trade. Um, yeah.
I think me and Kyle are probably similar. Um, I mean, the second part where you're taking huge risk. When I made massive account growth, no, I think both me and Kyle risked very small for a long time, anywhere between $100 and $300. I mean, did I ever have a $1,500 or $3,000 account and risk $100 a trade? Yeah, I never risked $30 or $15 a trade, and I blew those up. So like, it was gonna get blown up no matter what I did, probably. But when we're talking about like the journey to where I started, like after I broke even and lost money for 10 months, when I started to make money, like how did you make your first big leaps? I stopped caring about making big leaps and I learned good habits and good lessons and started to realize the value of risk reward. And when I only traded patterns and plays that had the ability to make me 3, 4, 5 to 1, and I started doing that, and OTCs were really hot and we had big breakouts, and I started making 5, 6, 7, 8, 9 to 1 and risking 100 or 200, but making thousands per trade. I just kind of blinked, and all of a sudden, after 3 months, 6 months, 9 months, I was just making more and more every month. And that was from like 15K. I don't know what I made, probably 40K in a good spurt for the first couple months of profitability. But yeah, you don't care about making big leaps in your account. You don't need to risk a lot to do it. It just kind of happens. If you look at anyone's P&L curve that has gotten to the 50K, 100K plus mark in a short period of time after they've gotten it, it's usually not because they learned some brand new pattern or started sizing up a ton right away. It's usually because they just finally stopped doing things that don't make them money and started focusing all their time and attention on something that does make them money.
Yeah, I 100% agree. Where I can't really look back and tell you, Joshua, that there was some first huge leaps in my account where I doubled my account overnight. Like that didn't exist. It just was, and again, Huddie makes fun of me all the time, but it's funny because it's true. It's like I just had a very slow, gradual growth. But like any compound growth, it compounds. And so year 1, 2, and 3, it was me just crawling away at getting a PDT. And then year 4, I cross 100K, but then year 5, I cross 1 million. And then year 6, I cross 3 million. And then now I'm at year 9, crossing 7. Like it compounds. And those big leaps maybe look to be the case at some point, because yes, eventually I start getting good at making 6-figure gains, and those become more frequent, and then it does make the P&L curve look very leap-ish, if that's even a statement. But like early on, yeah, it was very steady Eddie, very tortoise in the hare-esque, and I was just grinding along. In terms of risks that I took any huge risks I took. I was pretty good at maintaining my risks early on, but as my account grew and I became a millionaire, there were definitely some trades and some habits of thinking I was not unstoppable, but I was blind to the risks at hand. Specifically in 2022 with some China liquidation plays that played some short squeeze games that one in particular of iLag, like I genuinely just got lucky. I could have blown up easily a $500,000 plus account. And I just got lucky, and I didn't get bought in. Like it's embarrassing to say, but it's literally the truth. Like I just took a risk that was so far beyond over my head, and I just dodged a massive effing bullet. And I learned from that. Now that can't be the case anymore. I've put things in place to prevent that. 99.99999% as much as I possibly can, humanly possibly can. But yes, so looking back, there were definitely some risks that I took that. I can't really be proud of for sure. I think that most traders feel that way about their journey. If you trade long enough, you do look back and find some risk. You're like, holy crap, I can't believe I did that. But that's trading for you. B Wealth says, you guys are rad and great call on JNVR last week. That shout out to Dom. That's all Dom there. Crushed it on JNVR. And then ask if we can share any charts we're looking at. I mean, Bull, TGL today, NB, SBEV, now AREC, SUNE, MULN, you name it, the whole batch of them. And then Franny was at the grocery store during ARECs. Right, that's frustrating. Dromax asked Dom, where did you sell Bull today?
So I actually top ticked it at like 52.44. And then I sold the rest of 4/5 of my position at 44.
Like I sold a portion perfectly.
I sold 1/5 at dead top and then the rest at break even.
Damn it. It'd be like that sometimes.
I had all my orders in between like 52 and 56, and it got there and I was like, we good? And then it started to come down and I was like, and I just sat until it broke my risk level and never bounced, and ended up not bouncing the rest of the day. That's why we don't bag hold, folks.
I really just bled. That's kind of partially why I just shorted so late, because I was like, there's no level I feel like I should be getting short yet that makes me feel confident that it's going to get obliterated, but it did get obliterated to some degree.
It's going to be on watch again tomorrow for me.
Yeah, it's like you made money, but it could reset again. Do you guys have red flag criteria for shorting stocks like high institutional ownership? Yeah, I mean, high institutional ownership is not I wouldn't say it's a red flag, but it's not a green flag, right? It definitely doesn't make me feel good about the trade working smoothly because it could be very choppy. Red flags would be how low the float is. But again, any red flag doesn't necessarily take it off the tradable list for me. They're just things I take a mental note of, like how low the float is, how spready and liquidity wise is it. Like if it's super liquid, then that could be the biggest red flag where I just will not trade it. Like someone asked about what is JNVR today and go to my NASDAQ, and I just straight up like I'm just not. I wouldn't touch this with a 10-foot pole because liquidity was just awful. Anything you guys think anything else? But that's the main handful there. It's like 3 or 4 that I have.
Maybe is there a type of news you don't like to short?
Yeah, I mean with Hertz tomorrow, like I'm in no rush to short Hertz tomorrow. Like a billionaire play like that, like no thank you. If you want to get steamrolled, be my guest. Doesn't mean I'll take it long. Not necessarily. I'm not necessarily convicted that it's going to go up. Right, not enough to put my money where my mouth is, but it is enough for me to step out of the way and be like, this is not worth risking money on short wise. So there's that, because it could die. Again, there are some plays that have good news that do die, but like I'm trying to play the long game, and over the long run, shorting billionaire buy plays is not a smart idea in my opinion. Not a winning strategy. So P Daddy says, "You guys see FITY? Have you guys seen this? I don't think I have.
I just looked at it. It's like a 00 that went to a penny.
Oh, we're like talking OTCs.
Yeah.
Oh, I miss these, man. These were cool. What's the question? Did I see it? No, I didn't see it. Would be cool if it sparked up OTCs. It would be. Unfortunately, I've lost hope, so I'm gonna have to really see it to believe it. Because even then, this ticker did not have a lot of.
Ain't no one rando stock that we've never heard of gonna spark up OTCs.
Yeah, you almost need
Like-
you need something like FITY here to like 10x the volume
City.
and then 10x the price movement. Go like sub penny to like 10 or 20 cents on like massive billions of shares, and that might get it going. Like that might spark something. But this is cool. I don't think it's
Dude, the
sustainable.
firewood is wet, and I don't think you're gonna start that fire.
Yeah, I would agree.
Even if you have like gasoline, I don't think it's enough.
if you put gasoline on that sucker.
Dude, it's wet. It's damp. It's not the right type of wood either.
That's funny. Yeah, it's not dry by any means. Oh, okay.
This might be for Huddie only, but do you guys share the stats for each of your different strategies in the room?
Yeah. Short answer is yes.
Yes, that's true for everyone. And we're very free flowing about it. Like we've got a handful of questions similar to this of like, you know, if I'm in the room, is this going to be covered? I'm like, it can be. That's the whole point. Like we are free to discuss amongst each other. And again, we're teachers, but part of being a good teacher is trying to understand and know what the students need to learn. And because there's so many students, you know, there could be 10 different things a student needs to learn, but in any particular order across multiple students. So like communicating to us what you want to learn, when you want to learn it in the webinars where you have us individually is like, that's like the gold mine. Like you know, if you came in the webinar and be like, hey, Kyle, I want to go over stats on the first red day, like boom, we will jump right in. You know, so that's 100% what we would share in something like that for a webinar. So, and we do, you know, archive. There's like probably like 10 webinars, Huddie, of you literally going over your gap and crap strategy over the course of you actually learning it, like throughout, like when you first started to, like last year, like early last year. And it's all archived, so it's in there. Simon says, how do you stay disciplined? How do you improve as a trader? Two broad questions, but it's also,
It's kind of a good one.
yeah, also good ones. How do you stay disciplined, Huddie? How do you improve as a trader?
Yeah, Huddie.
Me? I'm
Me?
improve. How do you stay disciplined? I leave the computer if there's nothing to trade, and then I miss plays and I feel bad about it later. Otherwise, if I sit here all day, I cannot be disciplined. I'll do some stupid stuff. So I have like defense mechanisms to stay disciplined. I stay disciplined in my everyday life. I like remind myself that like the more disciplined I am, the more money I'm gonna make. And if I don't want to make money, then don't be disciplined. But like gambling and trading things that like when you've been trading for as long as we have, like you know what makes you money and you know what has very little chance of making you money. So it's very hard to even want to trade the things that don't make money. It's like not an option. It's like we know where our edge is. We know where our consistency is. We know where our profitability is. Like, why would we step out of that game? If you're good at Texas Hold'em, why would you go play a slot machine? It does not make any sense. You just wouldn't do it, right? So you got to find something you're good at, and then once you're good at it, like there's no reason to leave it. So like it's something that you build, and then yeah, someone else take it.
Hey, how are you? How do you stay disciplined? I mean, that's a question for yourself. I mean, this is one of the I can lead you to the pond, but I can't make you drink type of thing. We can tell you what we do, whether it's disciplined in your regular life, it's create rules for yourself, sticky notes on your computer, whatever. Like, but at the end of the day, whatever it is going to be that keeps you disciplined is going to be up to you. You know, we had a taser in the Michigan office back in the day, and if you broke rules, you got tased. But like at some point you realize that this is a dream that I have, is to be good at trading and to make my first 100K, my first 500K, my first million, whatever it is. And that the only way to achieve it, I know for 100% fact that if I don't want to achieve this dream, that I can continue to be undisciplined. But if I want to have any chance at letting my dreams become reality, then I have to follow rules. I have to follow plans. I have to follow ideas. I have to listen to my mentors, and I have to do what I say I'm going to do every single day. Like, I don't know if it was Kyle. Someone said it recently in the last Wine Wednesday or within the last week. It's like, do you believe when you look yourself in the mirror that, do you like believe what you say to yourself? Like, do you trust yourself or not to do what you say you're going to do? And if you don't, you will never make it. Even if you have stretches where you do well, you will give it up. You will have big losses. You will have drawdowns. You know, my goal is this year to have 12 green months. I know for a lot of traders, probably like, wow, you're an idiot and a loser. That's an easy goal. But it's not been an easy goal for me over my career. I've always managed to have 1, 2, 3, 4 red months, even on very profitable years. I'm just a very roller coaster ridey of a trader, emotional. And I don't want to be that way anymore. I want to be consistent. The only way to truly be consistent is to be disciplined. And how do you improve as a trader? I think it depends on where you are. But I think the answer that you should always be searching for yourself is, where do I belong in the markets? What am I good at? What am I bad at? How do I focus on staying where I belong? Like Huddie said, focus on what makes me money and keeping as far away from things that don't make me money. I think it's so funny. Most things in life, you try to turn weaknesses into strengths. But when it comes to trading, like, you just avoid your own weaknesses. Triple down on your strengths and avoid your weaknesses, because it's not worth it. You don't need to be a jack of all trades to make a lot of money trading.
Beautiful. Yeah, the only thing I'd add on the first part is right along lines of what Dom said of like, it's actually so funny. It makes me laugh because for those who maybe have seen this, or if let me know if you guys have seen this, Dom and Huddie. But there's a really funny meme video I've seen on like TikTok and Twitter where there's like, and I think it's a total spoof. It's not actually like real, where this guy is like a car salesman and he's like giving a conference and a speech on like how other people should sell their cars. And he's like, if the Taliban stole your parents and are going to kill them tomorrow, unless you sell 50 cars, you're going to sell 50 cars. Like, and it's like totally a spoof, and like it's a joke and it's funny. But like, it's also funny because there's like a slight truth to it, not that exaggerated, but like, if you really want to make trading work that badly, like, you're going to make it happen. Obviously it's not going to be in a month or your parents die, like something ridiculous, but like, do you want to make money trading? Yes. Okay. Well, Huddie said, like, go play poker. Don't play slots, right? If that's what you find yourself good at in the
unless
markets,
you're good at slots,
right? You got to be good unless that's your setup. Like, if my setup's first red days, I'm not going to go start trading S&P 500, zero DTE options. Like, it's just very, I hate to make it sound so black and white, but it's really that linear for me, right? It's like, I want to make money. I know the rules I have structured for me to make money. If I break them, I won't make money. That's simple, right? And so, like, I want to make money. That's literally the only reason why I'm here. And so I'm just going to follow through and do that. And how do I improve? I mean, I don't want to read that horse, but it's like the drive to want to make money, is what I want to do and improve. Like, I'm constantly refining myself. Like, am I making the right decisions? Am I following the correct trade plans? Am I having the correct trade rules? Am I following those rules? Like, it is a constant self-coaching, which is part of being disciplined. Like, do you have to be disciplined to self-coach yourself? And it actually makes me think of a really good friend I have where I love him to death and I wish him the best, but he wouldn't be a good trader, at least initially, because he even knows it himself. He's like, I have to have a boss to tell me what to do and when to do it, because if I don't get shit done. Like, he's honest with himself. He just knows he's very disciplined and very consistent for someone else, but not necessarily for himself. And that's the tough part about trading, is because you have to be that for yourself. Like, if you're not, like, good luck. You're going to have a very tough time. So hate to make it sound harsh, but it's unfortunate. It's the unfortunate truth.
All right, pause for a sec.
Sure.
Shout out to my brother. He's in the chat. He says, "What's up?"
Nice.
What's up, Evan?
Oh, this Evan. What's going on?
There he is.
Mr. Hudson.
Mr. Huddie Senior.
Stop.
Huddie Senior.
Said stop.
Do people call him Huddie at all? Or no?
No, he's an Evan.
Evan's just Evan. All right. I want to know, Evan, do you want to be called Huddie? Because I will do that for you. I'll call both Huddie.
Yeah, when your nickname is based off your last name.
Right. So then they're both Huddie. Sly asks, or not asks you, or he does ask. I've been tracking win percentage by setup, market cap, time of day. From your experience, what stats do you find most useful for filtering trades? What should I mainly focus on for consistency and size?
I don't know what it means.
Yeah, Dom discovered what he calls the magnetic 7 2 weeks ago.
He calls it the
A
magnetic
couple
5.
weeks ago. I don't know what they mean by their tracking win percent by setup, cap size, and time of day.
I mean, yeah, all those are
What's
good stats. It's just, I think it's trying to then filter, I don't know, the forest from the trees and what stats for which setup actually matter, right? So like win percent by setup is good, but you need to know the win rate for that setup with that, or not win rate. You need to know the risk reward with that win rate, right? You could find a setup that has a 90% win rate, but if the risk reward is just awful, it could very well be not worth it to trade that setup. So you need to know both those for that. Market cap size is good, but again, if we're trading small caps, they're all relatively going to be in the same range, so that's not that important, at least in my experience. Time of day, I mean, I can make it easy for you. At least for me, like 90% of my money is made within the first 2 hours. So, and I think that's true for relatively most traders. In terms of, what is this? Consistency and size. I mean, I wouldn't, sizing is about risk management. So like, I wouldn't try to worry if you're not profitable. I would not worry about how do I get the most size in the winners and the least size in the losers. Like you should just be taking the most minimal risk on every setup just to learn and to gain experience. And then once you have that experience, then start to tinker with sizing or increasing size once you find some level of profitability. But like, I would not, as an unprofitable trader, say like, oh, this is going to be a good trade, so I'm going to take 3x size on this one, because then the one that's a loser, your account's going to bleed much bigger than you wanted to, and last thing you want to do is lose that account before you have a chance to even get to that consistency, so to speak. First red day pattern. How do you decide the risk level when your previous day close is too far and RR is no good? Mr. Patel, that is the exact reason why I can't stand overextended gap downs. Because yeah, if they gap down too much, the RR is terrible, and I hate taking them.
Spike.
Yeah, you got to wait for a spike, and sometimes they don't spike. Or sometimes you can risk a level that is not red-green, but you let your win rate be much lower than what it probably should be. So it's a very tough thing to do, and it's why overextended gap downs are just not a strong pattern of mine. I'm profitable with them, but they are nothing to take home to the bank to per se. I could not live off of solely my overextended gap down profits, if that makes sense. So it's either be willing to miss them if they don't spike, or if they spike, then get good risk reward, risking the previous day's close. So lots of good questions tonight. Warren says, when you guys look at dilution every morning for gap and cramps, all the other criteria met 70% plus. But there is no set risk of dilution. Is there any times you avoid the gap and crap?
No.
Yeah, I would say no. Short answer is no.
Everyone agrees it's a no.
Yeah.
Next question.
Sly, when an offering comes out intraday market, what's your process? Wait, what? Nothing. I don't have to do anything when an offering comes out. Do you just short right away? No, I don't short offerings at all, really. I'm actually quite terrible at it. If I catch an offering, if I'm short an offering, it's because I'm already short. I almost have probably a 0% win rate on seeing an offering happen, being able to get short quick enough to then catch that offering and then make good money. My biggest not biggest weakness, but a weakness of mine is like news headline trading. And given that offerings are news headlines, there's almost a 0% chance I'm going to be able to chase that offering and get short. And then any specific criteria to make you avoid them, I avoid all of them. Like I said, it's
not a pattern.
I'm not an offering shorter chaser, if that makes sense. I've tried that before, and it's a pain in the ass because I get short at the bottom because I'm that late to the party.
Every time I've been in a stock that does an offering, it like panics and then bounces back bigger than ever before, and I'm like, well, this is fun.
There are some offerings like that. It is a nightmare. Because then you question like the entire idea, like, oh, is the offering not active? Is it not working? Like, why are we bouncing? Yeah, it's not fun. Not a strategy I would like to be part of. Ferrani says the middle class is disappearing after 2021. Kind of feels like plays don't move as clearly as markets beforehand. Do you think it could be because people have less to spend on chasing stocks?
It's not an important question.
Yeah, I don't have a clear answer for you.
We can't change whether it's yes or no.
Yeah, the only speculation I would just say to that speculation is like, I don't know, man. I think people, yes, the average citizen doesn't have more money to spend. Like, yeah, I know what you're referring to, Franny. It is kind of all over the news and just kind of a constant headline that people gravitate towards, whether it's true or not. But there's definitely truth to it. But then you have IPOs like Bull and NMAX going hundreds of %. Like there's a lot of money out there. It may not be from average people, but again, the traders, the investors, the people who are already willing to risk money in the market, there's a lot of money. I mean, gosh, Trump coin just 3 months ago or 4 months ago, whatever it was, went from multiple billion, like in 6 hours. Like the money's out there. It's just whether people are feeling risk seeking to want to risk that money. And given the recent market pullback last couple of weeks, that's not an environment where people are willing to throw dollar bills at a lot of stuff. So
I also don't know if I just agree with the sentiment. Since 2021, like there was the oil and gas run in 2022, there was AI in 2023, there was quantum in 2024. There's been a ton of great breakouts, reversals, first red days. We've had MSTR, SMCI. Cleanly, I think there's been a ton of clean plays over the past few years. Nothing's ever going to feel like, maybe we never see a market the rest of our lives like 2020 and 2021. Like that can't be our benchmark. Like,
yeah, good point.
There have been really clean, I feel like, moves.
Yeah, that's almost, and I didn't even realize that part of the statement there, Dom, but you made a good point there where, Fran, if 21 is your benchmark, that was not people having the average amount of money. That was people having more money than they've ever had in their entire lives. Right? I had friends who have never even looked at a stock, and then they hit me up being like, "What are we buying today?" like they all friends who I know who were practically broke had thousands to spend. Like that was not a benchmark. That was like the highest it will ever get. Right? And I would say the last 2 or 3 years is maybe a more accurate benchmark. So it could feel like if 2021 was your benchmark, yeah, it feels like everyone's pouring out. But like, no, that's because the government gave out thousands of dollars in free money to people who either did need it or even didn't need it. There was no scanning process for that per se. So, yeah.
Well, and also just like, it sounds like there's a little bit of emotion behind a message like that. Like, stop spending your time trying to relive 2020 or 2021 and start spending your time like creating a new benchmark. How could you have traded 2022 5x what you did trade at? How could you have done double what you did in 2023? How could you be the best trader you possibly could in 2024? Like, use the markets that came after it as those are like the market you're going to get for the next year, 10 years, whatever, because they were very average markets, I feel like, for us. But Kyle was breaking records every year still, even though we didn't have the 2020, 2021. He got better at trading through that time. Like, the market's going to give whatever it gives every year. We have no say in that. So wondering why it's happening, I just feel like it's a waste to make. It's like when, your parents or people sit in front of the news all night and just get angry. And it's like, what was that worth it for anyone? Like, you can't do anything about it. Like, the market's going to give us plays or it's not. Like, and if it stops giving us plays, we'll become lawyers or something. Like, so it's
Play
like
the ball as it lies.
Yeah, well, not for golf. Huddie would never do that, but Huddie kicked that back into the fairway.
Dude, just fucking burn. Hey?
but we're not playing for real, so it's okay.
Oh my god, that's funny. All right, last
I
couple
would kick it
questions
back in the
here.
fairway.
Yeah, you would.
What do you guys do when you wait? What? What do you guys do when you guys see?
Did you do well on like the reading part of all?
Well, it's like he said two you guys twice. He didn't have to say you guys twice. So I got confused. Like, he's like, what do you guys do when you see some weird action in a stock? What are the causes of it, and what are some usual outcomes of it? I'm going to give you the same answer that Dom just gave you. Here's the thing. I'm trying to formulate this. You don't have to know everything to be a profitable trader. right? You don't need to know as much as you think you need to know, right? You need to know the essentials, right? Which is discipline, following trade plans, understanding your edge, understanding your setup, and then executing it, right? But like to this point of this question of like when you see weird action, what causes it, and then what are the outcomes? Like I don't ever will know. I'll never know. I don't have to know. All I need to know is that if stock does A, I will cut my loss. If stock does B, I will make a profit, period. That's the plan, right? I don't need to know what happens in between. And, if this shows, if the level 2 looks this way, then I'm going to have to do this thing. And like, yeah, some trades I do that, but like, that's like a scalper's, at least my perception of scalping, that's like a very big thing. I'm not a scalper, right? Like unless it's if it's anything other than a parabolic short or a panic dip buy, like I'm not reading level 2 and like discerning if the action is weird and how that dictates my outcomes of the, like, it's just like, is the setup there? Yes. Do I have a trade plan to approach that setup? Yes. Then I take the trade plan and how it plays out is how it plays out, right? I play where the ball lies. I have no control of what action is weird and how it looks and how it makes me feel. Like it's just, the trade's going to happen whether I exist or not, and I'm just there to capture the outcome.
Play the ball as it lies.
Yeah. So I don't mean to rant too long there or off tangent, but you don't want to fall into the pit of over-analysis by paralysis, right? You don't want to, because I've seen it all the time. Being traders are like, but why did that spike happen? Like, I need to understand why. Like, you'll never know. You don't have to know. What you do need to know is you're going to, act like Tom says all the time, like act like I'm going to be wrong and I don't know anything, because you don't have to know everything. In fact, you will know literally most times nothing. You just need to be there for when moves happen in your favor, which is why you need an edge. So. Warren asked, does Evan trade? Does he trade, Huddie?
No.
He does not. There we go. Sly says, when it comes to first red days or gap and craps, what specific checklist makes you size in big? Is it more about the setup itself, float volume, dilution, filings, etc.? Sly, this would be a very good question. I don't mean to try to sell you, but this would be a very good question for a webinar. This could be another 20-minute answer. Minimum, and we just don't have that time today. But to give you a short one, gap and craps, I don't size any bigger on any particular plays. I try to keep it all one size fits one. First red days, many factors. Yeah, float, volume, dilution, technicals, extension, right? Characteristics of the stock that's super unique to any particular trader, ticker, the news. All of it can have an effect. But how that goes in details, again, that's for something on a much longer form answer. Wealthby says, what if you were consistently profitable? How do you recommend increasing size? Just add a 0 and hit it twice, or 10% a week? No.
I thought a number that's extremely uncomfortable.
No, I would
so
not.
let's say you risk 500. Wait. You normally take like 2,000 shares. Now you take 20,000.
No, I would not 10x my risk overnight.
No, it's 20,000, then hit it twice.
You will definitely feel if it's working or not right away. If it bothers you, the new size.
Yeah, if you're like most people, wealth B or B wealth, you will pardon my French, shit your pants the first time you do that.
Add a 0,
do that
twice.
tomorrow, Kyle.
Oh my God.
On the next gap and crap, just add a 0 to whatever you would have done, and then hit it twice.
I would panic. I would be freaking out.
A good chuckle.
Because I would be risking.
I was gonna make like $250K tomorrow on one gap and crapper.
Yeah, I'd go from risking 11K to risking 110K like that, and I would cry. No.
There goes your month.
Yeah, my 1 month would be gone in a single trade.
Or your month doubles.
Yeah,
double
it could be
or nothing.
huge.
Let's go to the roulette table. Put it all on red. But no, a very realistic and safe way to increase size is do it very minusculely. So when you say add 10% a week, try adding 10% a month. So if I'm risking $100, I'm going to 110. And then if I trade, so not fun and fast. But if I trade well
Kyle
for a month,
was never supposed to catch us, Huddie.
I don't know how he did it.
But if you trade well for that on a month, then you go to 120 risk. You trade well for a month on that level of risk, then you go to 130 and then 150 and then 175. Like it's a very,
Jack Kellogg says add more than 10% a month.
Yeah, again, you could do what Kellogg does, but I would argue Kellogg is
I don't think about, like, if you risk $200 a trade and you've been there for a couple months and your numbers are really good, go to 300, 400, then go to 500. Like, you should be able to, like, get yourself to bigger profits sooner if your numbers are really good. Like, because there's not a very big difference mentally between taking a $400 loss and a $700 loss. But if you have the same stats and you make a lot and you continue to make money, your numbers are going to you're going to make a lot more money if you stay consistent through that stretch and it doesn't feel that bad or different. Like, you can't even truly get within $10 of risk every time. Like, if you say you're risking 500, you might accidentally lose 470 or 540. Like, yeah. I think you can go up a little more at a time.
Yeah,
there's wiggle room. There's leeway.
Yeah, as it gets bigger, the slippage becomes so apparent to where, right, you can't just, like, you can't go from risking $1,000 to $1,001. Like, that's just not right. You're gonna have to start going into the hundreds and then to the thousands. Like, for me, I'm risking 11,000 a trade on average. If I want to increase it, I'm gonna increase it in minimum 1,000. Like, it's gonna go to 12,000, and even then, I'm prepared
1,010.
Yep.
11,010.
11,010. And then next month, 11,020.
20.
But yes, that is how I've done it.
2 zeros. I feel like add 2 zeros and hit it twice is exactly what Kellogg does.
Yeah, that
Except
would
it's like 3 zeros, smack it 6 times.
That does seem like what Kellogg would do.
I got to read it again. Just add a 0. Get twice.
That literally makes me think of, again, back to TikTok. It's like, why twice? You're thinking small. Do 5 times. Do 10. Just keep doing it till your account has no more buying power. Like that, yeah. Not a safe way to go about that at all. All right, last couple questions here because we are over. Kyle, did you touch Mullen, and are you waiting for up or?
Of course, he touched Mullen.
Both. I have touched Mullen, and I am also waiting for a pop. So yes and yes. Anyways, Sean, last question of the night. If you could only trade one ticker for the rest of your careers, what ticker would you choose? Bitcoin, and I wouldn't trade it. I just hold it. There you go.
Oh my gosh. Get out of here. Go home. Did you hear what he said, Huddie? What drunk. A homer.
He's had one glass of wine.
Yeah, you need to put that back in the fridge, save for a week.
I don't know about that one, guys. Here we go.
We want to say Fannie Mae, but I don't want to trade that every day.
That's a good answer, actually.
Realistically, I can figure out how to do it. Buy support, sell resistance, unless resistance is buyable. Maybe Tesla.
Yeah, it's a tough.
I need those
question,
big caps, though. Gosh, I would get so sick of trading that crap every day. Because when they're in uptrends and stuff, I'm trying to go to a different period. I'd end up just bagging everything. I feel like.
Yeah, that's a tough question, Sean. It's not our styles at all. Like I know you don't mean this, but I'm interpreting that question as like, would you just rather be unprofitable? Because I can't be profitable on trading one ticker for the rest of my life. That's just not how I roll. So.
Yeah, it would have to be one of the fun big caps, one of the magnetic 7s.
The Nvidias, the Teslas. The Googles of the world. Anyways, guys, that is our time. That is our hour. Lots of good questions. I feel like we were really efficient on these today. We probably answered more questions than we ever have.
Whoever was reading them did a great job.
Yeah, that guy sucks. That guy was terrible at reading. I apologize, everyone. English is not my strong suit, but math,
it's not your first language, right?
No. Goo goo gaga baby talk was my first fluent language.
You haven't quite been able to disconnect from that yet?
No. Yeah, I still read like a toddler. Yeah. I'm like, what? No. But anyways, guys, thanks so much for tuning in. Again, Wine Wednesday is over, but Good Morning Nasdaq will be back at 8:45 Eastern tomorrow. And then 4-Leaf Clovers, if you're in there, you will get a webinar from me at 11 Eastern. If you're not in 4-Leaf Clovers, feel free to join. You've joined tonight or tomorrow morning, you would have probably access to it by immediately to join then. So feel free to do so. And yeah, have a great rest of your Wednesday night. And have a good one, everybody.
God bless your souls.
Bless your souls.